Before we begin, remember that this video is for educational purposes only and isn't insurance advice. Always consult a licensed professional for your specific needs. Before you sign another insurance policy, you need to know this. Getting your first car insurance quote can be a massive shock to the system. Most new drivers are charged double or triple what they should be, simply because they don't know which buttons to push or which questions to ask. Today, I'm showing you the exact framework to slash those premiums without sacrificing protection. Alright, let's start with the real-world problem. Insurance companies view new drivers as a high-risk group, but you don't have to accept the first high price you see. Insurance companies use data to predict how likely you're to file a claim, and new drivers lack a track record. Because you don't have years of safe driving history, they default to the highest price tier. Understanding that this is a data game helps you realize that your goal is to provide data that proves you're the exception to the rule. One of the fastest ways to lower your rate is staying on or joining a parent's existing policy. It's almost always cheaper than a standalone policy because you benefit from their long-term loyalty and multi-car discounts. Just make sure you're listed correctly to avoid claims being denied later. If you're driving an older car that isn't worth much, you might be overpaying for full coverage, like collision and comprehensive. If the cost of the insurance over 2 years equals the value of the car, it's often smarter to carry liability only. This protects others if you cause an accident, but saves you thousands in premiums. The car you choose dictates your insurance price just as much as your driving record does. Let's look at how to pick a winner for your wallet. Every car is assigned to an insurance group based on repair costs, performance, and safety. A small engine hatchback is going to be significantly cheaper to insure than a high-performance sedan or a large SUV. Always check the insurance group before you sign the papers for a new car purchase. Modern safety features like automatic emergency braking and lane keeping assist can actually lower your rates. Insurance companies love these because they reduce the likelihood of low-speed fender benders. When getting a quote, make sure the insurer knows exactly which safety packages your car has. A car that's 3 to 5 years old is often the sweet spots for insurance. It's modern enough to have safety features but has depreciated enough that the replacement cost is lower for the insurer. Avoid project cars or heavily modified vehicles, as these often carry massive insurance surcharges. Quick reminder, this isn't personal advice. Policy terms and rates vary, so always compare and consult a licensed agent. Now, let's look at the dials you can turn on the policy itself to bring that monthly number down. The deductible is the amount you pay out of pocket before insurance kicks in. By raising your deductible from $500 to $1,000, you can often see a double-digit percentage drop in your monthly premium. Only do this if you actually have that $1,000 saved in an emergency fund. Many companies offer a pay-as-you-drive program where a device or app tracks your speed, braking, and mileage. For a new driver, this is the fastest way to prove you're safe and get an immediate discount. Be aware, however, that aggressive driving or late-night trips can sometimes work against you. If you're in school or university and maintain a B average or higher, most insurers will give you a discount. They view good grades as a proxy for responsibility and lower risk. All you usually need to do is provide a copy of your most recent report card or transcript. Taking a voluntary, state-approved defensive driving course can shave a percentage off your liability coverage. It shows the insurer you're proactive about safety and understand the rules of the road better than the average novice. These courses are often available online and can pay for themselves within a few months. Price varies wildly between companies for the exact same coverage. Here's how to shop like a pro. Never settle for the first quote you get, even if it seems reasonable. Prices for new drivers can vary by over $1,000 between companies for the same driver. Get at least 3 quotes, one from a major national brand, one for a regional player, and one through an independent agent. Most people pay monthly, but insurance companies often charge convenience fees or interest for doing so. If you can afford to pay the full 6-month or 12-month premium upfront, you can save 5% to 10% instantly. It's one of the simplest ways to avoid a hidden cost. In many states, your credit score significantly impacts your insurance rate. Insurers have found that people with higher credit scores tend to file fewer claims. If your credit is low, focusing on improving it for 6 months can lead to a much better insurance rate at your next renewal. Even if you don't own a home, buying a small renter's insurance policy from the same company can trigger a multi-policies discount. Often, the discount on the car insurance is larger than the entire cost of the renter's policy. It's essentially getting extra protection for free or a net profit. Finally, let's talk about what to avoid so you don't get taken advantage of or end up with a policy that doesn't work. Be extremely wary of people offering cheap insurance on social media or through messaging apps. These ghost brokers often take your money and provide a fake policy document. Always verify that you're dealing with a licensed agent or a reputable company's official website. Watch out for roadside assistance or rental car reimbursements if you already have these through a credit card or AAA. These small $5 to $15 monthly charges add up over a year. Read the fine print to ensure you aren't paying twice for the same service. Insurance companies often raise rates slightly every year, assuming you won't take the time to shop around. This is known as price optimization. Even if you like your current company, check other quotes every 12 months to ensure you aren't being slowly overcharged for your loyalty. If your situation is complex, like having an international license or a unique vehicle, don't rely on online algorithms. Call an independent agent who can shop dozens of companies for you at once. They're paid by the insurance companies, so their expertise is usually free for you to use. That's the practical version of how to get insured without breaking the bank. The big idea is to understand that your first quote is just a starting point, not a final answer. If this helped, like and subscribe for more practical guides from Insurance Guru that help you compare costs, understand quotes, and choose the right coverage with confidence. Don't forget to compare quotes and talk to a licensed professional before making changes. Thanks for watching. Remember, this is educational content only. Talk to a licensed insurance professional before making any coverage decisions. Subscribe for more plain English insurance guides.